What if I told you that the moment you crossed a certain age, you quietly became eligible to stop paying for things you've been charged for your entire life? But no one is ever going to tell you. No letter, no phone call, no alert. Just money continuing to leave your pocket month after month, year after year, even though legally it doesn't have to. This is not a theory. This is not a loophole. This is built directly into the system. And the most surprising part? The people who benefit the most from this are usually the ones who never claim it. Not because they don't qualify, but because no one ever explained it clearly enough for them to act. There is a massive difference between being eligible for something and actually receiving it. The system does not automatically switch things off for you. It does not refund you for what you didn't claim. It simply keeps going unless you step in and make a change. And that gap between qualifying and claiming is where thousands of dollars quietly disappear. Most people assume these types of benefits are meant for someone else. Some think they are only for those struggling financially, so they ignore them completely. Others believe they only apply to wealthy individuals with complicated financial structures, so they tune out as well. Both assumptions are wrong. These benefits are spread across a wide range of situations, and chances are at least a few of them apply directly to you. Some of these can reduce ongoing monthly expenses. Others can eliminate certain costs entirely. And a few of them, if handled correctly, can protect your finances long term in ways most people never even realize are possible. But none of them activate on their own. Every single one requires a simple action, a form, a request, or a quick confirmation. And here is the uncomfortable truth. The system is not designed to remind you. The responsibility falls entirely on you to know what exists and to take the step to claim it. That's why so many people continue paying bills they are no longer required to pay. Not because they made a mistake, but because the information never reached them at the right time. So let's change that. Imagine reducing a bill you've been paying for decades, not by negotiating or cutting back, but simply by applying a rule that already exists. Imagine keeping more of your own money every month without changing your lifestyle at all. That is exactly what this is about. The first thing you need to understand is that age-based benefits are layered. They don't come as a single advantage. They come in multiple forms across different areas: taxes, property costs, healthcare expenses, and even basic utilities. And while each one may seem small on its own, together they can make a significant difference. Let's start with something that has recently changed and is already being overlooked by a large number of people. There is now an additional reduction applied to taxable income for individuals above a certain age. This reduction does not replace anything you already receive, it stacks on top of it. That means whatever deduction you were already getting is still there, and this new one is simply added to it. For individuals, this can result in thousands being removed from taxable income. For couples, it can effectively double. And yet, many people will go through the entire filing process without ever noticing whether it was applied or not. Why? Because most people assume that if something applies to them, it will automatically be included. But that assumption is where the problem begins. Systems rely on accurate input. If something as simple as a birth date is missing or incorrect, that benefit may never trigger. And unless you actively check, you may never realize it was skipped. This is not about complexity, it's about awareness. A single line on a document can determine whether you keep more of your money or hand it over unnecessarily. Now let's move to one of the most impactful areas where people lose money without realizing it: property-related costs. This is where the numbers start to become much larger and where small oversights can turn into long-term financial drains. There are specific adjustments that can reduce the taxable value of a property before any calculations are even made. This means the amount you are being charged is based on a lower number right from the start. It's not a discount applied later. It's a reduction built into the foundation of the calculation. But here's where it gets interesting. Many people assume this adjustment is automatic. In reality, it often requires a one-time application. If that step is missed, the system simply continues calculating the full amount, year after year. And that's just the first layer. There is often an additional adjustment that becomes available later, specifically tied to age. This is separate from the initial one and must usually be requested independently. Even individuals who have already applied for one benefit may completely miss the second simply because they didn't know it existed. And then comes the most powerful of them all, a mechanism that can prevent future increases altogether. Instead of your costs rising with market changes,
they can be locked at a fixed level. No matter how much surrounding values increase, your base number stays the same. Think about that for a moment. In an environment where costs are constantly rising, having something fixed in place can completely change your long-term financial outlook. Who benefits the most from this? Everyone in different ways. For some, it means immediate relief. For others, it means protection against future increases that could otherwise become overwhelming.
And even if you don't directly own property, this still affects you, because increases in property-related costs often flow directly into other expenses. When those costs stabilize, the ripple effect can benefit a much wider group of people. Now let's talk about something that many people don't even realize they're paying every single month. It's automatically deducted before they ever see their money, which makes it easy to forget it exists at all. This is where another major opportunity lies. There are programs specifically designed to cover certain recurring costs entirely for those who meet the criteria. Not reduce them, cover them. That means money that was being deducted every month can simply stop leaving your account. And yet, millions of people who qualify never apply. Why? Because they assume they won't meet the requirements, or they've never heard of the program in the first place, or they believe it's too complicated to deal with. In reality, the process is often much simpler than expected. A short conversation, a quick review, and a straightforward application can determine eligibility. And in many cases, approval for one program can automatically unlock access to another, multiplying the benefit without requiring extra effort. This is where awareness becomes powerful, because once you know what exists, the process becomes much easier to navigate. There are also smaller programs that don't seem significant at first glance but still matter. Small monthly reductions on basic services, assistance with essential utilities. Individually, they may not seem life-changing, but when combined with larger adjustments, they contribute to a noticeable difference. The key is not to dismiss something just because it appears small. Every recurring cost adds up over time. And when that cost is something you no longer need to carry alone, even a small reduction becomes meaningful. And all of this leads to a bigger realization. The system is not necessarily working against you, but it is not actively working for you either. It operates based on input, not intention. If you don't take the step, nothing changes. If you don't ask, nothing is offered. That's why so many people continue with the same financial patterns for years, even when better options are available. Not because they chose to, but because no one ever showed them a different path. But once you understand how these pieces fit together, everything shifts. What once seemed fixed becomes flexible. What once felt unavoidable becomes optional. And what once drained your resources can start working in your favor instead. Now here's where everything starts to come together, because understanding these benefits is one thing, but actually applying them is what creates real change. And this next part focuses on the areas where the biggest amounts are being overlooked, often for years, without anyone realizing what's happening. There is a pattern that repeats itself again and again. People continue paying out of habit. They assume everything is already optimized. They trust that if something applied to them, it would have already been handled. But the system does not work that way. It waits for input. And until that input is given, nothing adjusts. Let's talk about taxation again, because this is where one of the most common and costly habits exists. Many people continue having the same amount withheld from their income long after their financial situation has changed. They don't revisit it. They don't question it. They simply accept it as normal. But here's what most don't realize. Once multiple age-based adjustments are applied together, the actual tax obligation can drop significantly, in some cases far lower than expected, and in certain situations, it can reach a point where little to nothing is owed at all. Yet despite that, the same withholding continues. This creates a quiet cycle where money is consistently taken out, only to be returned later, or sometimes not fully returned at all if something was missed. It's essentially allowing your own money to sit elsewhere temporarily without any benefit to you. The fix for this is not complicated. It starts with awareness. Once you know your actual obligation has changed, the next step is simply adjusting what is being taken out going forward. That way, instead of waiting to recover it later, you keep it in real time. And that shift alone can noticeably improve monthly cash flow. Now let's move into an area that can have an even larger long-term impact: housing-related costs beyond the basic reductions already discussed. There are mechanisms in place that allow certain costs to be delayed rather than paid immediately. This doesn't eliminate the responsibility, but it changes the timing in a way that can be incredibly useful depending on your situation. Instead of paying continuously year after year, the balance can be deferred and settled later under specific conditions. This allows you to maintain liquidity and control over your finances in the present moment. For many people, especially those who prefer stability and predictability, this can create breathing room without requiring any drastic changes to their lifestyle. Another important factor that is often overlooked involves transitions within a household. When financial responsibility shifts from one person to another, certain benefits do not automatically follow. They require action to be preserved. Without that action, adjustments that were previously in place can disappear, causing sudden increases at the worst possible time. This is one of those situations where timing matters. Knowing what to file and when to file it can prevent unnecessary financial strain during an already difficult period. And then there are smaller, almost hidden adjustments tied to everyday expenses. Things that seem routine, like registration fees or recurring charges, can sometimes be reduced or removed entirely based on age or eligibility criteria. These are rarely discussed. They don't come with reminders, but over time, they still add up. And when combined with larger changes, they contribute to an overall shift that becomes very noticeable. At this point, you might be thinking that keeping track of all of this sounds overwhelming, but it doesn't have to be. The key is not to memorize everything. It's to follow a simple process. Start by identifying the categories that apply to you: taxes, housing, healthcare, and basic services. Within each category, there are specific adjustments available. You don't need to know every detail right away. You just need to ask the right questions. For example, instead of wondering whether something applies, ask directly what is currently on file and what is missing. That one question alone can reveal gaps you didn't even know existed. The next step is verification. Don't assume something has been applied just because it should have been. Confirm it. Look at the actual documents. Check the actual numbers. A small oversight can continue for years if it's never reviewed. And finally, take action where needed. Most of these changes involve straightforward steps: a form, a request, a quick update. None of it requires complex strategies or major decisions. It simply requires follow-through. To put this into perspective, think about someone who has been paying the same expenses for years without questioning them. Nothing about their life changes. They don't move. They don't reduce their lifestyle. The only thing that changes is that they finally align their situation with the rules that already exist. Suddenly, expenses decrease. Cash flow improves. And financial pressure begins to ease, not because they did something extraordinary, but because they stopped paying what was never required in the first place. That's the real takeaway here. This isn't about finding shortcuts or exploiting anything. It's about understanding what already applies to you and making sure it's actually being used. There's a big difference between what is available and what is activated, and that difference is entirely within your control. So here's a simple way to approach this moving forward. Set aside a small amount of time to review your current situation, not in a complicated way, just enough to identify whether everything is aligned. Make a few calls if needed. Ask direct questions. Confirm what's already in place. Then look at what can be adjusted going forward. Not just for a one-time benefit, but for ongoing improvement. Because the real value here is not just what you save once, it's what you stop losing every single month after that. And if there's one thing to remember from all of this, it's this. Nothing changes until you take that first step. The system will continue exactly as it is unless you intervene. But once you do, the impact can be immediate. And for many people, it's not just about the money. It's about the realization that they've had more control than they thought all along. Benefits, Blueprint, USA.